The volatility has reduced a bit. I presume the cycle timing will continue because there are some fundamentals around the mining halving. Some people have the theory that the halving should have a lower effect over time, but actually I believe it's sort of offset by reduction, by more and more coins getting cold stored and people adapting to the way that they're going to interact with Bitcoin to kind of accumulate rather than speculate. And so, the proportion of mined coins that halving reduces is more constant than people would think with, the amount of coins that are available to trade on exchanges or something like that. So that's shrinking and the halving shrinking. So as a percentage change, it's more constant. So, continue to see a big halving effect. I think, one theory which is going to be tested this cycle is the diminishing return theory. And so people are drawing extrapolations from the last bull market being a bit muted, but I think there are lots of overhangs on that, the COVID, supply chain, all the economic effects around that, plus, the DeFi failures and so on. And I think the other thing is, technology typically goes through an S-curve, and I think we're still early. We're in the industry, so we feel we're at late stage, but it's actually still early. And so I think there is scope for kind of more rapid adoption phase. And if that happens, this kind of inferred slowdown may be reversed.
In the past 72 hours, Bitcoin has been on a wild ride, swinging between $92,000 and $95,000. As we speak, BTC is holding strong, marking a 1.15% jump from its last week close. But this surge isn't random. Behind the scenes, a perfect storm is brewing. Renewed investor confidence in risk assets, whispers of policy clarity from the Trump administration, and the growing expectation of Federal Reserve rate cuts. Add in the explosive impact of Bitcoin ETFs and a more favorable regulatory climate, and it's no wonder institutional giants are diving in, viewing Bitcoin not just as a risky bet, but as a future safe haven. And if you think this is big, Adam Back, legendary CEO of Blockstream and one of Bitcoin's most respected voices, is sounding the alarm. Ignore the noise. Bitcoin's real move hasn't even started yet. According to Back, if the US takes the bold step of establishing a strategic Bitcoin reserve, we could see Bitcoin prices rocket into 7 figures. Yes, 7, within this very cycle. His bullish vision rests on a few powerful pillars. Institutional adoption is accelerating. A national Bitcoin reserve could unleash unprecedented demand. With inflation fears and shaky monetary policy, Bitcoin's appeal as a store of value is stronger than ever. The fundamentals of Bitcoin have already outpaced its price. The market simply hasn't caught up yet. While he once predicted a $100,000 Bitcoin, Back now believes that's just the beginning. Higher targets are now on the table, driven by global macro shifts and policy decisions. Stay tuned till the end as we break down Adam Back's powerful reasons why Bitcoin's next stop could be beyond imagination. If you're serious about riding this wave, smash that like button, drop your thoughts in the comments, and share this video with someone who needs to hear it. And if you haven't yet, hit that subscribe button for the latest Bitcoin updates you won't want to miss. Thank you, and enjoy the video.
So, if we see this cycle having a much higher cycle-to-cycle increase than prior cycles, that would kind of invalidate that, possibly invalidate the power law or even stock-to-flow. So, I think a, sort of 500,000 to 1 million cycle top in this cycle is within bounds. So
you think that this cycle top could be between 500,000 and 1 million?
Yeah.
That's a pretty high number.
Yeah.
Do you think that is predicated on the U.S. having to buy Bitcoin for the strategic reserve, or that could happen without that?
I think if that happens, all bets are off because you get kind of, country level. I think other countries have to react if and when they see that, right?
Talk me through this more. Hold on. This is a big number. 500K to 1 million. I don't think you're saying it's going to do that. I think you're saying it's possible. Right. What are the assumptions that go into us driving a price that high?
Well, there's a lot of things going on at the moment, right? In terms of ongoing buying demand. So the ETFs have absorbed about 2 times the mine supply since launch. MicroStrategy and the other treasury companies absorbed another 2 times the supply. there are active traders absorbing at other times. So, there's retail dollar cost averaging. So there's somewhere between like 5 and 7 times the mine supply being bought. And we're in some kind of, short-term consolidation where short-term investors or medium-term investors are taking profit. But I think, they can only sell once. Once they're gone, then there's a kind of supply shock situation. And you get a lot of reflexivity in Bitcoin markets where, the price is up because the price is up. That's how we get kind of exuberance and then the blow off top. And it's also still fairly early in the cycle in terms of, 6 months after the halving to 18 months, 2 years after for the cycle. So there's a lot of time to run. And, other metrics are shrinking, right? Like coins on exchange and that kind of thing. Another thing which is helpful, which wasn't necessarily predicted, is the ETF holders seem to be sticky. So they're, what Warren Buffett would call good investors. They buy and hold. They're not, shaken out by a small move. They're there to, hold a position. I think the other thing that could help this phenomena is you've got to think that when the people buying the ETFs, so about 30% apparently is institutional. The rest, I presume, is kind of the top 10% wealthy in the US minus the top 1%. I think they have about $30 trillion. So they have a low allocation at this point. But when they call it broker or financial advisor, they're reallocating from their portfolio. And so the question is going to be, well, what do you want to sell to put your Bitcoin position? The natural answer would be, we'll sell the physical gold ETF, but a Bitcoin ETF. And the other phenomena is that the proportion of gold that's in ETFs is a lot smaller than proportion in Bitcoin. So I think, you could see if there's some momentum on this that, the other target I like is that Bitcoin could pass gold in market cap this cycle, which is around the same level, but it could do that while taking the shine off gold, basically, because price is set at the margin. If a lot of retail or like relatively wealthy US investors are selling gold ETFs and buying Bitcoin. Now, of course, it's partly offset by global macro where governments in some cases are buying gold. Mm-hmm. But, I think some of the US politicians are talking about selling gold and buying Bitcoin too. So, if we've seen that will change the game.
Do you think that'll happen?
The latter, I'm not so sure. It's all down to politics, and that can be slower than anticipated. It's quite complicated and not my area. So I'm just focused on, a workable regulatory environment where there's no kind of unreasonable friction and the free market doing its thing. I think, the global macro helps in a way because Bitcoin is a hedge to a lot of that.
Do you think that if the US came out and said, actually, we're not going to buy Bitcoin, that would be a negative? Like, could it be a headwind and actually create issues now that people are kind of expecting?
I mean, not too much, because I think if people were, I think sometimes things are not priced in the way you would expect with Bitcoin. Mm-hmm. It's not always a very efficient market. So I think there's a lot of disbelief about it happening because, put it this way, if it was priced in, we'd already be in seven-digit Bitcoin, right? So I think it's not priced in. So if it doesn't happen, or it happens in a kind of, well, let's not sell the seized Bitcoin, at least, I think that would be in range as well. Right.
What's your general take on these meme coins?
Watching the market for a while and kind of shaking my head, like, where's the efficient market hypothesis in like
doesn't exist
repricing those, right? And I think in this cycle we're starting to see some of it, and I think what's driving it is actually more is less. So the market's kind of got saturated, and the sort of promoter trying to get attention for a token and then selling out the promoter or the founder shares is being compressed so that it's by the minute game, and it's professionally kind of front run with automated trading and stuff like that. So I think that's left investors, speculators, disillusioned. And so actually, what you've seen in prior cycles is this kind of alt rotation or alt season, right, where altcoins will get compressed in a bear market and swing higher in a bull market, and that's not really happening now. Bitcoin dominance ratio is up 50% in the last 30 months. So Bitcoin's going up, and the alts generally are not. So I think that's another kind of factor that's potentially helping. And I think the other thing that helps there is that even though the Bitcoin dominance index is like 70%, I think if you take out stable coins, that's the full market. If you look at the institutional investment composite of it and the ETF buyer component, the dominance index is going to be much higher because there aren't that many ETFs, and the typical government, state, local government, fund managers, it's very heavy into Bitcoin versus alternatives.
For a number of corporations, obviously MicroStrategy or Strategy being the first in the public markets, but now Metaplanet was the single best performing stock in the world last year. There's a whole host of these that are starting to put Bitcoin on their balance sheet. How do you look at that phenomenon? And do you think that that is something where like every company eventually puts Bitcoin on their balance sheet? Or is it something that maybe there's kind of a certain type of business that does it, but the average business will refrain?
Yeah, I mean, I think it's a phenomenon that's here to stay now. And, of course, that strategy works until Bitcoin has reached hyper-Bitcoinization, and everybody who wants Bitcoin has got the allocation they want. And then, maybe you get into some more gold-like kind of volatility after that. And so, the way, and of course, some people are skeptical about the whole phenomena, right? But I think it makes, I've been invested in a number of them personally, and the way I get my thinking around how to price what is a fair market MNAV, like the multiple of market cap to treasury, to Bitcoin treasury, is that look, this company has got the ability to borrow at 0% for 5 or 6 years and buy Bitcoin, which has generally gone up in any kind of time frame of that duration. And so that's a good deal. If you could get those terms yourself, you would take the loan, right? But it's difficult to achieve. It is an operating company. And so, with the convertible notes, it's even better, like a 50% conversion price on a convertible note. You're only taking 2/3 of the dilution while you're getting the money to buy Bitcoin now. So in a way, it's bringing forward some Bitcoin demand, sort of accelerating Bitcoin adoption a little bit. And, the phenomena where they can sell at the money shares to accelerate it, or a balance of convertible notes and at the money shares is interesting. But I think it's just the market telling us that there's a dislocation between the fiat world and the hyper-Bitcoinized future, right? So I think it's part of that phenomena. So we'll see more of it. And I think it's got some longevity, and you can model what you would think of as a fair price for the MNAV based on, what percentage rate of Bitcoin per share you can expect to achieve on an annualized basis. Like last year, MicroStrategy did 73%, based on a 6.9% announced today, I guess. That's annualized 57%. And so you can see if they can compound at any kind of those rates, then, a reasonable MNAV is quite plausible. And even if it compresses to 1, let's say you say, well, it's hyper-Bitcoinized in 10 years. At that point, the MNAV drops to 1, let's say, all conservative assumptions. Then you can just kind of back out while you're buying it at like 1.8 times MNAV. How fast can they accumulate Bitcoin between now and then, and assume that you back out the multiple at the end. It's very plausible to have a reasonable MNAV in between now and then, I think.
And that's a wrap on today's video. Adam Back's bold prediction is absolutely mind-blowing. A $1 million Bitcoin this cycle. Coming from one of the most respected names in crypto, this isn't just hype. Adam calls it exactly as he sees it. The big question is, do you believe it? Will Bitcoin really smash through to 7 figures? Or do you think this is just wishful thinking? Let's hear your thoughts. Drop a comment below. If you got value from this video, make sure to like, subscribe, and share it with your family and friends who need to hear this incredible update. We'll keep bringing you the hottest Bitcoin and crypto news every single day, so you never miss a move. Thanks for watching, and I'll see you in the next one.